Hello and welcome to Pro Trader Strategies Market Commentary for Monday, August the 29th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today in the form of core PCE, which is personal consumption expenditures index, and this is the core. So this is along the lines of the PCE, which is an inflation gauge. Now the core actually is only goods and services that are consumed by the individual. So this is the one that the Fed actually has a tendency to garner with the most weight. So keep that in mind. It came in right in line with expectations at 0.1% versus the expected 0.1%. So right in line with expectations and showing not any inflation whatsoever. We also got personal spending and personal income. Both came in line with expectations. Personal spending came in at 0.3%. Personal income came in at 0.4%. So a little bit of an increase there, but nothing to write home about. And they were both a little bit lower than the last month's data points. Anyway, on to the overall markets. As you can see here, we've got crude oil just slightly down on the day, down about 85 cents, but still in this little bit of a range, getting quite comfortable, trying to move towards this $45 a barrel area. Another thing that came out is Iraq came out with their budget for the upcoming year, and their budget is based around $35 oil, so about $10 lower than here. So that is something to really keep in mind. If they expect that it's going to go further down from here, they're looking at global consumptions and how much they're pumping out there with the build that's already in the system. That is a bit of light shed on the entire global pricing of oil as far as I would say. I would think that would say that we are well overpriced in their eyes. So keep that in mind, that we could see a little bit more to the downside as they continue to pump out. Gold, trying to find a bottom here. It is below the 50-day moving average, which is pretty bearish for gold. But today it has pushed a little bit higher as the overall equities were mixed earlier this morning. But as the equities are rallying, they are, bucking the trend, if you will. On to the bonds. Bonds started out much lower, came down, tested the value area high here and repelled away from it. That was a big down move for the most part, up over a point on the day, but as you can see, that is well below the close from yesterday, or Friday, I should say. And we have the NASDAQ pushing higher by 15 points on the day, but still stuck in that trend as the market is just extremely complacent right now. E-mini S&Ps, same thing. They are up 12 points on the day. The NASDAQ, actually, if you noticed, has been a lagger from even Friday to today, just not really participating on the upside as the techs are weighing down on the NASDAQ. Apple is down, and probably something that's really affecting the NASDAQ there. Onto a few trades that I've done, and this one actually I did Friday late in the day, right before our Friday webinar. I took it off, and I had on the October-September 47.5 call calendar, and I originally paid 67 cents for that, sold it out for 90 cents. So the September's what I was short at the 47.5 calls, and was long the October 47.5 calls. If you remember, the reason why I did that that way was because that the Fed was really going to start talking about holding off on raising rates, with Friday's talk of being a little bit hawkish and wanting to start raising rates rather soon. I decided to take that one off. All right, so that one I took off on Friday. And then MYL, the EpiPens. If you know all of this bad press that MYL's been getting because they've raised the EpiPen prices so much over the last few months, they are getting a lot of bad press there. Now they've decided to come out with a generic EpiPen, so that should help out with some of that bad press. Plus, I think it's all kind of behind us right now. They've decided to look at repricing those EpiPens that are the non-generic type, and I think that this is going to be a good opportunity to put this on. Now, in the webinar, I talked about having putting on these call spreads after you see a big 10% correction in an underlying. We've gotten that. It's actually going to find a lot of support right here at the 42.50 area. So I decided to go in there and do a long call spread right in line with the rules of that webinar, and did the October 42.5/50 call spread, and I paid $2.24 for that. So if you want to find out more of the rules on how to set up a long call spread so that you increase your probabilities of success, go to protraderstrategies.com and sign up for that. Another trade that I'm actually trying to get off is XLE right now, and with XLE I have on the September 72.5 calls, and I originally sold them for 42 cents, and I'm really close to being able to cover those for 21 cents, which is right there in line with my rules on the on selling strategies. So that one I thought I would be filled by the end of this webinar, and for some reason it's just not getting a whole lot of fills today. I got a lot of working orders going on today that are very close, but just have not been filled. So, all right, that's all I got for you guys today. Friday's webinar is going to be on long put spreads. I'm going to go through the rules and how to set that up to increase your probabilities of success, and how to manage those strategies, when to take them off for your maximum profit potential. All right, that's all I got for you guys today. Other than, if you can't take that, take it easy.